But beyond the shipping lanes, everything, how is it, you mentioned the Federal Reserve's reaction to all these energy prices and the spikes. How is that influencing the long-term outlook for precious metals?
The Federal Reserve wants to lower the interest rates. They can only do that if the job number is solid, if there is some growth, and at the same time, inflation is under control. Now, if the Federal Reserve lowers the interest rates, that's very much positive to gold, only because the opportunity cost in investing in gold becomes less. Think about it this way. When your bank is paying you 5%, let's just say, right now they're probably paying about 4%, and inflation is at 3.3%, and mind you, this is the government reported inflation. If the bank is paying you 4% and inflation is 3.3, in other words, you're just making 0.7%. And imagine if the rates drop, now all of a sudden the bank is only paying you 3%. When you think about the real rate and you factor in inflation, the average investor and central banks are looking at this, they're saying, if interest rates are going to drop, I'm not incentivized to hold US paper dollars. What's the best alternative? And that's where gold comes in. This is exactly why Wells Fargo has revised up their forecasts at the beginning of April for the year end 2026 for gold at 6,100 to 6,300. And you have a lot of other Wall Street banks are strengthening their forecast for the year. So in other words, in a very simple manner, lower interest rates, very much positive for gold. Printing more money, diluting the value of the dollar, very much positive for gold.